It's 10 a.m. in Lagos, Nigeria. That means it's time to delve into the world of business on Business Morning here on Channels Television. You're welcome. I'm Ini John Mekwa. And we start here in Nigeria. A total of 725.57 billion naira has been shared as Federation accounts revenue for March to the federal government, the state and local council areas. This is contained in a statement issued at the end of a virtual meeting of Federation Accounts Allocation Committee. A summary of the revenue distribution shows that the federal government received 277.1 billion naira, states received 227.2 billion naira, and local government received 167.91 billion naira. And moving on now, we move to MTN. MTN seems to be in the news these days. Yesterday we had them. Today, a new certificate course has been unveiled as a School of Media Pan-Atlantic University. And that's courtesy MTN. The course, a Media Innovation Program, targets media practitioners, people like us, and is aimed at providing requisite skills and capacity in reportage of a technology-evolving media landscape.
The audience here is made up largely of journalists from the print, broadcast and digital media, others who do business with media practitioners, the telcos and ICT practitioners, and the academia.
What has been your experience been like with this?
Getting to the crust of the event, a gap has been identified, born out of research, engagements of media practice, and as part of MTN's shared value philosophy, and that need is about to be plugged. MTN has partnered with the School of Media and Communication of Pan-Atlantic University to create a new program, Media Innovation Program.
A lot is happening in the media landscape. A lot needs to happen also in the media landscape. And therefore, the theme of our discussion today is on media innovation. It's a certified course run by the School of Media, thank you to the Dean, in Pan-Atlantic University with a focus on the convergence between ICT and the media. So how are all these technology changes actually converging with the media, and how can you use them to your advantage, understand how to leverage the technology to become better media practitioners?
It's not so much about being better today, but how today can leapfrog prospects to be prepared and accentuate the disruption that technology keeps bringing.
I think that the sort of training that we need to impart on individuals and organizations, and the fact that both can coexist, but of course being driven by technology.
To apply, log on to www.smc.edu.ng/MTN-MIP.
The MIP is not about the death of a practice medium, but how technology can help your choice practice in the media.
We'll also learn from the media about the innovations that are coming in the technology space, about the telecommunications industry so the media can report accurately on it, and how we can use the confluence of those two things, media, reporting, journalism and technology, to provide a better service that's relevant for the society of tomorrow.
And according to the sponsors, it's part of their sustained objective to share value with the larger society, and in this instance, the media practitioners, essentially to provide timely, accurate, and professional information for consumers across Nigeria.
Welcome back. Well, oil prices dropped as investors remained cautious, about dwindling fuel demand in China. That's the world's biggest oil importer. And that's because of COVID-19 restrictions. Brent crude futures fell $1.48 to $103.84 a barrel, while U.S. West Texas Intermediate crude futures slipped $1.39 to $100.63 a barrel. Both contracts settled over 30 cents higher in the previous session due to ongoing concerns about worldwide supply and another drawdown in U.S. distillate and gasoline stocks. The U.S. Energy Information Administration says that crude stocks rose by just 692,000 barrels last week. That's short of expectations, while distillate inventories, which include diesel and jet fuel, fell to their lowest since May 2008. China's capital, Beijing, closed some public spaces and stepped up checks at others today. as most of the city's 22 million residents embarked on more COVID-19 mass testing aimed at averting a Shanghai-like lockdown. Analysts also point out that a slowdown in global growth due to higher commodity prices and escalation in the Russia-Ukraine conflict could further exacerbate worries on oil demand. Well, to drill down on this and other issues in the commodity space, we have Longi Dafoe, analyst with a financial derivatives company. Hello, Longi. Good to see you. Second time for the week.
Yes. Yeah.
So oil prices dropped, and it seems like it's being driven more by what's going on in Asia, China, Shanghai, Beijing, the COVID-19 pandemic, more than what's going on in Ukraine at this time.
Yeah, exactly. So demand concerns are king right now. So the market is really worried about what's happening in China. As you've already said, China is in fact the world's largest importer of oil. And when oil needs go down in China, it tends to affect the whole global market. So that's exactly what we are seeing, even more than what's happening in Russia, Ukraine for the moment. Yeah.
So a combination of these forces kind of balances it out, I think, because with the scenario in Ukraine, Russia and Ukraine, what we see is a spike in prices because it affects supply. But with what is going on in Asia now, we see a reduction in demand. So that kind of balances.
It balances it out, exactly. Oil is still trading above $100 per barrel, which is insane. And like you said, it's balancing it out. What's happening in Russia, Ukraine, and oil prices, we've seen Russia make some significant moves. There are worries that Russia might decide to say that all its oil payments, all its oil exports now will be in rubles. So that might also move markets a certain way, depending on how that plays out.
Yes, and European countries, the EU, they're also talking about, cutting off from Russian oil, gas. I think they say some buyers have started paying in rubles. Have you had any details?
Yes, some, I believe, about four
buyers,
also have started paying in rubles.
But we don't know who they are. I've been trying to get the name of those people, and I learned 10 of them, have already set up the ruble account, which is one of the requirements by Gazprom.
Yeah, exactly. We saw yesterday Russia banned Bulgaria and Poland from receiving gas exports from Gazprom until they decide to pay in rubles. And this is really affecting the market. We see Russia making moves in order to sort of punish countries that are against its invasion of Ukraine.
Using it as a weapon.
Yeah, a weapon, exactly.
Gas has now become another weapon.
Yeah, it is, in fact, Russia's biggest economic weapon to be played, and Russia has decided to play it. And this is, of course, moving the market. It is affecting sentiments in both the gas and oil, because the market now believes that, if Russia is doing this in the gas market, they are more than likely going to repeat it in the oil markets as well.
Yeah,
Yes.
but I mean, Russia also needs the revenue. If they're funding the war, there's also need for money.
Yes, they do need the revenue, exactly. They do need the revenue. And they
get about $880 million from European countries every day. That's a lot of money.
It is a lot of money, indeed. And it's not just money, it's also in terms of strategy and positioning itself for a better move in what's going on in Ukraine. Poland, the reason why Poland might have been chosen, despite the fact that other European countries have come out against it, is that Poland has some sort of strategic value. So Poland is more towards the east, and a lot of Ukrainians have moved into Poland, so it has some sort of a strategic relevance as well. Poland has also been one of the largest critics against Russia's invasion.
Yeah, exactly. I know they have millions of Ukrainians who fled from Ukraine. They ended up in Poland and they have jobs, they made life comfortable. So I guess with this cutting off of the gas, it might also affect the level of aid that Poland can give.
Can give to Ukraine, exactly. Poland, because of Poland's strategic positioning, it has been sort of the gateway through which aid has flowed from Western nations into Ukraine. And now we can see Russia really trying to flex its muscles and put a stop to this.
Yeah, because I was wondering, why did Russia not go for Germany, go for, all those other countries that have very high buys?
Gas is still flowing to Germany, it's still flowing to...
Especially Germany. Germany just sent some weapons to Ukraine.
To Ukraine, exactly.
I think early this week.
They did. So like we said, I do believe it is a combination of a strategic positioning and, of course, trying to push up the value of the ruble. That is what we believe.
Exactly, because the ruble gained yesterday. The ruble gained I think it closed at about 97.7.
Yeah.
You know,
well,
it went down to
lost,
as low as 300 to a dollar at the peak of it.
It did.
I think Russia is they are engaging some very profitable strategies there. Well, other than that, well, I think this is also related to U.S. hit the highest in 2 years.
Yes, the dollar.
Yeah, what drove that?
It's a combination of different things, 3 key things. Russia, Ukraine, the uncertainty surrounding that. We do know that the dollar, the greenback, is a very good safe haven for investors. So when we tend to see uncertainty in the markets, buyers and investors typically run towards the dollar as a safe haven. It's also a combination of interest rates, monetary policy tightening. We know the Fed has signaled that they are going to be more aggressive in trying to curtail inflationary pressure. And this is, of course, causing the yields to go up and causing the value of the dollar to appreciate. So those are the main key things now that are currently driving the upward surge in the dollar. And it's also having negative effects on commodities. It's having negative effects on oil. This was one of the reasons why oil actually went down, because the value of the dollar went up. So what typically happens is when the greenback appreciates in value, dollar price commodities become more expensive for holders of other currencies. Yeah. So your Naira, your Yuan, your Euro or whatever would now buy you less dollar than it typically would, which of course buy you less commodities.
I don't know if you heard that Kenya, they were supposed to do a Euro bond of $1 billion, and they had to put it off.
They shelved it because of global yields, appreciating global yields, and of course, I do believe if Nigeria, I believe last month, also raised about 1.25 billion in the Euro bonds market. And if you notice, I believe we got it for about 8% or so. So this was about 2 percentage points higher than a similar deal raised 6 months ago. So you can really see that prices are going up. So
that's part of the reason why Kenya put off theirs, because it was becoming too expensive.
Yeah, I do believe so. Now they're trying to pivot more towards concessional loans, so maybe loans from the IMF, from the World Bank, just to try and mitigate the amount of debt service costs that they might need to pay.
I wish we could do that sometimes, because our debt service is becoming worrisome also. But if Russia succeeds, now we see that 4 buyers have already conceded, 10 more have already set up Ruble accounts. Do you see it affecting the value or the dominance of dollar?
Yeah, it will definitely affect the dominance of dollar in the global commodities
because
market.
Dollar was used to pay about, I think, 36 or 39 or so % of gas payment to Russia. So if Ruble takes that place, you know, how will it affect the dollar?
It will affect the dollar, because the dollar has been king for a very long time in terms of international oil and gas payments. So now that we see Russia trying to force a move towards the ruble, Russia is the largest supplier of gas into the EU. So yeah, it will definitely move the markets. It should definitely affect the value of the dollar going forward, at least in the near term.
And back here in Nigeria, let's go to the commodities space now. Cross River and Abia begin harvest of cocoa. This should be good for us.
Yeah, it is good, but unfortunately, it is coming a bit late. So this is the mid-crop harvest season. So it should have started earlier in March, but then it was delayed due to rainfall. So earlier rainfalls, which started in January, didn't continue on, and so this sort of it sort of halted things. So now that we see rainfall starting to pick up now, the harvests are now starting to begin.
And so we're going to export this and export them in raw form as usual.
Unfortunately, I do believe Nigeria is only able to capture most African countries are only able to capture about 30% of the value chain in terms of cocoa exports. And this is very amounts to a lot of lost potential revenue, because we're only tapping into 30% of the value that we could potentially be tapping into. So yes.
So Longi, let's have a deal. Let's go and have a manufacturing company in Cross River State, and then we will turn this cocoa to chocolate
and sell it.
And then we can sell to
that is a very good business opportunity. Actually,
but the reality is that there's so many hurdles on the way.
Yeah, so I think it draws back to maybe the government trying to make the business environment more conducive. providing adequate infrastructure, providing the adequate amounts of aid that could allow anybody, you, me, anybody on the streets could wake up one day and say, okay, I want to set up a chocolate manufacturing company in Cross River or Abia State, and would be able to do it and tap into a huge amount of value. Yeah.
Or you can just do chocolate bread. I'm sure Nigerians will buy that.
Yes, definitely. I'm sure.
Because we have the market.
We have the market for it. Exactly.
So what else is happening in the oil space? Are we over the Indonesia's crop protectionism? Indonesia stopped exporting palm oil. Are we over that? Are we still in that?
We are very much still in it, and things are looking bleak, to put it in the mildest terms. So Indonesia is the world's largest exporter of palm oil. I believe they account for about 33% of global palm oil exports. Yes. And palm oil itself accounts for almost half of global vegetable oil exports, and it really is a perfect storm, and the ones that are going to be bearing it the most are the poorest countries in Africa also. So palm oil is used in almost everything from cooking jollof rice or whatever, to
even making things like soap.
Exactly, soaps, ink, printer ink. There's so many things that palm oil goes into using. So now that we're seeing this ban come in, it's really going to push up prices of these things even more. Yeah.
So that soap you enjoy might become more expensive. And to think that Malaysia actually came here to pick the seeds, and that story and all that. And once again, is another potential that Nigeria is not tapping into.
Yes, we seem to be talking a lot about missed potential these days. Yes.
Okay, should we say missed or delayed?
Missed or delayed, both actually.
Is there any other thing happening in the commodity space?
I believe we covered most of it. I believe we cover most of it, yes.
All right, Lonji, thank you so much for coming on the show and sharing your thoughts with us.
Thank you.
All right, so that was the commodities segment. But there was something there, like we mentioned. Kenya had to shelve its $1 billion euro bond because of debt servicing. Well, we're going to put our attention there because once again, Nigeria's debt stock is there in our faces, and if Nigeria is using about 90% of its revenue to service debt, then we should really talk about that. That's what we'll do after the break. This is Business Morning on Channels Television. Yeah, welcome back. The International Monetary Fund, as the IMF, has projected that Nigeria's total public debt will rise steadily to 44.2% of the GDP by 2027, adding that the total fiscal spending of the general government, that's the federal and state government, will widen to 6.4% of the GDP this year, 2022, and that's from 6.0% last year. According to the Debt Management Office, national public debt rose by 20% year-on-year to 39.56 trillion last year. It went up from 32.92 trillion in the previous year. Also, at the end of September 2021, debt servicing to revenue ratio stood at 76%. That means that 76 kobo out of every 1 naira earned by the government is spent on servicing debts. Well, to help us understand what this costs you and what it costs your pocket, we have our Assistant Professor Olabisi Akikugbe, is a co-convener of African Sovereign Debt Justice Network, and he joins us from Halifax. Good morning, Bisi. Good morning. Thank you so much for joining us.
Thank you very much.
So we talked a lot about this last year, and we keep talking about it. And one of the defense is that Nigeria is still within the limits of 40% of, that's 22.47%, when you talk about debt to GDP ratio. But IMF disagrees, stating that the nation's debt to ratio, even though it's still within 40%, but it calls for concern. How do you see this from your network?
Thank you very much. The IMF's concern is an interesting one, and it's one that borders on three potential issues. One is the fact that issues around debt has significant challenges when it comes to transparency. Number two is that circumstances of hidden debts have crept up around African states. If we look at the Mozambique situation that happened last year. Number three is about the fact that we just don't know how much debts are there from private creditors. So if you put these three issues together, you can understand why, from the point of view of, for example, the IMF, there are concerns about Nigeria's current debt profile.
Why should Nigerians be concerned about this? What's it costing Nigerians? I mean, we might as well just take this as one of those government conversation and leave it at that corner. So why should the average Nigerian be concerned about this?
Yeah, thanks. The average Nigerian has to be concerned about it because Nigeria's debt profile has direct capacity or direct implication on the capacity of the Nigerian government to deliver on its other economic and social goods. For example, public health. The past 2 years has shown the need, for example, in the health sector, for a very reliable infrastructure that is well financed, that the citizens can rely on. So it means if the government's debt level continues to rise, the capacity of the Nigerian government to deliver its health infrastructure promises is significantly compromised. You can also look at the transport sector, for example. Yes, we have made some gains with respect to our railroads, with respect to fixing some of those old roads and building new ones. But the capacity to continue to develop on these are significantly hindered.
And, well, the government borrows for infrastructure because, I mean, then it becomes a question of how do we get out of this cycle? So if the government borrows for infrastructure, shouldn't that give hope that we will get out of it?
Well, thank you. I think you've just hit the very important part of this conversation, which is almost a cyclical way that not only Nigeria, but many other developing countries around the world are trapped in this debt profile. The amount of surcharges that are levied on the capacity, on the loans, the payments that have to be made to service them significantly trump the capacity of the states to get out of the payment. As you're saying, there is more that's been added at the top of the news. The DMO, that's the Debt Management Office, has projected an increase in our debt profile. So we're really in a dire situation with respect to our loan profile, and the capacity to really get out is one that requires a radical solution. That is what we have called for in our recent statement that we released prior to the beginning of the spring meetings of the World Bank and the IMF.
We would like to hear some of those radical approach that you're talking about.
Well, thank you very much. Well, they're significantly planned around 4 ideas that really drive a lot of what we do. Number one is that at the international level, the voices of African states, like their fellow developing states, have been marginalized. Therefore, there's important need to, number one, rethink the governance mechanism of the World Bank to give enough room for African states to be at the table. And number two is that in relation to the IMF, its quota system needs to be revised significantly to account for the states to be on the table as well. Number three relates to the general role. We think that special drawing rights, these are mechanisms that have been put in place by the IMF, needs to be administered in a way that puts the interests of developing countries at the table. But number four, which really all connects to the fact that the international system that African states, Nigeria and others are in today were created at a time when they were really not there. These are institutions that were created in 1941 and 1944 circa. So it means a lot of the states were under colonization at the time. And it means we need a radical international restructuring of the architecture that really controls our international financial regime in a way that centers the interests of these states, that puts them at the table for the negotiation of their own interests. That's number one. Number two is that at the African level, there's the African peer review mechanism. About a month or two ago, they announced that they were also starting an African peer review mechanism. That is important because the review mechanism has direct impact on the capacity of a state to borrow and to stabilize its economy. And so it matters that, out of the poor ratings we've seen in the past year, particularly the Ghanaian finance minister coming out and calling for a restructuring of the international financial architecture. Thirdly, is at the national level. The legal mechanism that governments have in place in African states is still very challenging. There are issues around transparency, accountability, and gaps in the legal regimes. We think that at these three levels, we need to drive the consciousness, and that's what we're doing with the activities of the African Sovereign Debt Justice Network that has various arms to its activities.
All right. Well, there are also those who have talked about federal government seeking a debts moratorium. I don't know what you think about that.
Yeah, so that's interesting. If you think about this as a temporary measure to dealing with the challenges we have at hand, then that works. But what we have called for, which is the other part of the radical changes, is actually debt cancellation. We need a clean slate for these states to really thrive. It's a really challenging situation that the pandemic of the past 2 years has thrown us in. Prior to the pandemic, things were dire. Now it's worse. And so debt cancellation is an important strategy for Africans that we at the AFSDJ and our collaborators really think African states need to put at the table.
But we had that clean slate and then we made the mess of it again. So why don't we deal with our issues? Why do we always have to go out there to... Isn't there something we can do looking inward? We had a clean slate once.
And you are right. You see, that's number one, the complex nature of this hydra-headed monster. It is similar to that. But, I've mentioned or alluded to the national challenges. I've alluded to the transparency gap. I've alluded to the legal frameworks that are not there. Corruption, unfortunately, it's a very terrible thing. And so even at the national level, when governments borrow, we do not know how those loans are administered. That is a challenge. And so our aim at the AFSDJ is not just to point at the international. We believe a simultaneous process at the national, regional, and international level is what we need. We need those accountability mechanisms to be set up. We need a review mechanism like the one that the UNCTAD is spearheading to be supported, to really monitor and to think about the debt at the international level. But also at the national level, we do need our legislative houses to do their work. We do need the state legislative houses to do their work, to monitor really how the executive administers these loans that they procure.
And then there's also the call to reduce cost of governance.
That is a real thing, right? At the end of the day, you do find that a lot of the loans that are gotten or procured really go to really keeping the government afloat. And that's because we have a bloated regime of governance. It's not the first time Nigeria, by the way, has addressed these issues. The call to trim down Nigeria's governance, robust governance architecture has been on the table. I think it is one way. It goes a long way in addressing some of the issues, but it doesn't really go quite as far as addressing some of these fundamental issues. They are baked into the structure, into the mechanism of governance that we have in Nigeria. They are baked into the regulatory regime of international governance. By the baked in, actually, I'm talking about the inequality regime, the way in which these states are not able to address them. So for Nigeria, if the country really is able to trim down the cost of governance, that would be great, but transparency also remains key in other areas.
All right, so if the projection of the IMF, which is that by the end of this year, 2022, that Nigeria was spending as much as 92.6% of its revenue to service debts, if it actually comes to be, could you paint a picture of what direct and indirect impact this will have on Nigerians?
Oh, thank you very much. Well, it's hard. It means, for example, that for the average Nigeria, the government, number one, may not be able to do anything about the state of our road infrastructure. Number two, it means the government may not have any fiscal space to really create any new economic-driven jobs, right, that it might want to support. Number 4, it means, areas such as, again, I emphasize, health sector will be significantly compromised. This really cripples the capacity of the government to meet those basic needs and services that you and I as Nigerians need. The socioeconomic rights that you will need to enjoy as otherwise, housing, security, amongst other issues are significantly compromised.
And, well, doesn't look like there's anything a Nigerian can do except we just keep talking about it.
Oh, no, there's a lot. That's one part of it. It's to ask questions. You see, we are running a democratic governance regime, and it is great to see a lot of politicians trying to uphold the ethos of democratic governance. We need to ask questions. We need to ask questions not just of our leaders in Abuja, not just of those at the Senate. We need to ask of the local government chairpersons, the LCDAs, the legislative houses at the State Assembly, and then the governors. We need to make them accountable at this time, particularly that Nigeria is going through an election cycle. It is an important conversation that we need to put on the table. Quite apart from that, though, citizen advocacy groups have been doing a lot of work. We need to know the terms on which the loans that are procured, are being given. We don't see them. And that's a challenge to the extent that these things are, secret, hived off, and then we don't have adequate information to really assess what the citizens need. So the citizens have a lot to do. We talk, but we ask questions, and we can do public interest litigation. That's another aspect. That's the one that brought out the Mozambique situation. And so there are organizations, civil societies that are doing this in a respectful, meaningful way. And our work in AFSDGN, in terms of research, is geared towards really supporting those kinds of initiatives as well.
All right. Thank you so much, Olabisi Akinkugbe, co-convener of African Sovereign Debt Justice Network. We will keep asking questions. At least that's what I'm paid to do. I'll keep doing that. Thank you so much for sharing your thoughts with us.
Thank you.
So from there, we head to the markets. Will Ibonge standing by. Hello, Will.
Hi, Amy. Good morning.
Good morning.
So the markets, well, it was a close call for the market yesterday.
Very close.
Very, very close.
We're getting close to that prediction I made.
No. It was a close call. I didn't say we're close call. We're getting over and back to the green zone. But okay. I hope today's
I think it was 0.01.
Yes, 0.01. Okay. Right. So it's right there on the screen. It was a close call for the equities market. Traders, traded quietly. We saw gains recorded in Boa Cement, but the gains recorded in Boa Cement and Guinness were the ones that were able to lift the market, that ensured that we didn't get to the red zone yesterday, thankfully. Now the markets closed higher amid the profit taking we saw in banking names. We saw UBA down. A lot of stocks were down in the banking sector. The tier 1 banks were down, except for one or two of them. Now, all-share index, we see now, is still at 48,571.75 points. Year-to-date gains and return, month-to-date gains remained unchanged. Literally nothing, changed yesterday. And the total volume of transactions, the turnover there was negative. There was a sea of red there. We saw 246.7 million units transacted. We also saw it valued at 2.32 billion naira and over 5,000 deals. Multiverse, one of the stocks listed on the equities market, was the most traded stock by volume. It topped volume transacted yesterday at 36.24 million units, while Lafarge was the most traded stock by value. It was at 392.65 million naira. Now, on sectors performance, we saw banking, as I mentioned earlier, it was down, it was deeply in the red yesterday. Consumer goods was up, industrial was up. Insurance and oil and gas also were the laggards in yesterday's trading session. Now, we move over to the NASD market. Similar, trends persisted there. Negative market sentiment, 0.27% down at 766.7 points, and the market cap is at 1 trillion naira. Now we move on to the volume transacted. We saw that it was, it was elevated yesterday, 51.63 million units transacted, 432.3 million valued at 432 million, and then 46 deals executed yesterday. But to give us more insight on what's happening in the equities market, to break it down for us and know what investors should expect, we have Onose Asotie Enaholo, investment research analyst at Main Street Capital. Hello, Onose, how are you doing today?
Good morning. I'm doing well. Thanks for having me.
So, Nasa, as I was speaking with Ini, I would say it was a close call for the equities market, wasn't it?
Yes, it really was yesterday, just by marginally. I mean, the market gained marginally by 1 basis point, and if you look at, the historicals, at least for the past 12 days that we've seen, positive gains, the market's only, the daily return was only in the single digit between 1 and 10 basis points, only one time before now on the 19th. And now it's been double digits, basically over 10 basis points increase on the daily. But now, yesterday and today, yesterday was 5 basis points, today is 1 basis point. So what I think we're seeing here right now is a slowdown in the market. The market looks as if it's beginning to reverse, and that's natural, because no market goes up forever. Now we know that investors were coming in, value investing because they believe certain equities or certain stocks are going to do well in their Q1. So as Q1 results begin to come out, we now begin to see whether or not investors begin to see whether or not their bets were right.
Okay, so
for example,
speaking of Q1, Access Bank was out yesterday. GTCO was also out. So could you tell us, give us a breakdown of those results, and was that to investors' expectations?
For Access Bank, were able to increase their profit after tax in Q1 by about 9%, which isn't bad, given all that has happened. In Q1 with the rise in inflation and all the economies, the global economic issues, and then even when you look at the banking sector in Q1, I think for Q1 the banking sector increased about 0.79% yesterday for Q1. So given that increase, I think Access Bank actually did okay, for their results. Now, if you look at GT on the other hand is a different story, because their Q1 results is actually a bit in the negative. Their profit after tax actually reduced by 5.13%, and we already see the market punishing GT. Because for the past 3 days, GCB has been in a decline for the past 3 trading days, from about 24 naira to about 23.9, and it looks as if it's still going down. So those are kind of some of the dynamics that we see here. It seems as if GT may not have lived up to investors' sentiment or investors' expectations, and now it's paying for that.
So so any dividend in tow for investors? Should they look forward to anything in the interim, or it's just going to be a dry lull for them?
Well, certain stocks are known to pay dividends, media dividends. For example, UBA, GT, Zenith, MTN, Seplat. Right now, MTN has released stocks like MTN, Seplat. They have really strong fundamentals, and those are things that investors are looking forward to. Even Zenith, Zenith will have to release their Q1 first, so that investors could kind of gauge the health. But right now, things are looking positive for them. Yes, there has been profit taking, across board, but that doesn't necessarily mean that all stocks that people are taking profit from are being punished. You can have certain stocks that have done well, that investors just believe, okay, they've made enough profits, as much profit as they had projected, and want to come out of. So now you are going to now see a lot of people entering stocks whose Q1 results are good, are solid. People will start re-entering those stocks now that when you see that the market comes down a bit.
Okay, we'll watch and see. So thank you so much, Onose Asotie Enaholo, for sharing your thoughts with us. Investment analyst at Main Street Capital. So Ini, you've heard what they said. We're waiting for today. We'll see if investors take the bite. And the market will close
Onose said it. He said it's not like they're punishing. It's just a normal cycle. I mean, if you're an investor and then you put your eggs somewhere, and then it beds some other eggs, you want to take it and then watch and see what's going to happen. So.
That's it.
All right, thank you so much. We will certainly watch that market and see when it dips, and then people can come in and then we'll come back up again. Thank you so much. So we'll take a break now. When we come back, we'll head to London. This is Business Morning on Channels Television. Welcome back. Just before we head to London, Laddie Williams is standing by to give us updates from the crypto space. Hey, Laddie, what's going on?
Yeah, it's still, Bitcoin struggling to look for direction at this point. We're seeing Bitcoin losing that 40K range and still struggling there. And we see the market still, the fear greed index showing sentiment is still at extreme fear at 24 points this morning. Market cap, $1.80 trillion. That's added about 1.15. We're seeing mild spike there from Bitcoin. 24-hour volume traded, $85.14 billion. That's down by 11.22%. Bitcoin dominance sits at 41.57%. We see Bitcoin there trying to get a little breather there from the 38,000 level. It's gotten to $39,400. That's up 1.95%. And volume traded $31.75 billion. And we see Ethereum there holding up the 2,800 zone, up 0.62%. Volume traded 17.18 billion. And we see the top ultimate market cap is mostly red on that counter. We see XRP, the biggest, down at 1.39% down at 64 cents. We see XRP nearing that 50 cents range at this point. It's lost 80 cent mark for a while now and seems to be going lower at this point. BNB, $390. And we know once Bitcoin gets really volatile, we'll see the altcoins suffer more, down this morning. We're seeing them down double digits yesterday with the sell-off we saw with NASDAQ. So it's quite a volatile market we're seeing right now with Cardano there sitting at 83 cents, down 0.46%. Let's bring in Bjorn Martins there now, CEO Passive Income Token. Hello, Bjorn.
Hi, good morning, Laddie.
Good morning, Bjorn. Great to have you. Well, I noticed that a new trend is forming right now with move to earn. Before it was play to earn tokens. Now I'm seeing a lot of move to earn tokens actually moving at this point. Some of them seem like they're trying to catch on, on this trend and, could be money grabs. But how are you seeing this trend going at this point?
Now, it's beautiful to see that we see now possibilities to earn money in doing a positive footprint to the earth. Exercise, be active, be healthy for yourself, and you even get paid for it. I cannot say anything else, and this is a great thing for cryptocurrencies as well, for people to really support people that not even known with crypto now can finally earn money while they're jogging around, while they're exercising and taking care of themselves. And of course, a lot of people are gonna try to cash grab the trend, try to copy, fork the token and deploy them themselves. But the Steppen, GMT, like you're talking about, I think it's a great concept.
Yeah, and traders would want to jump on this, try to catch the next one that's going to go up. But for me, I'm thinking this trend might be ending, at this point with GMT, being the leader. What do you think traders should be doing at this point?
For traders, I would, if you're interested and you're a sport guy, go use GMT, invest in Steppen, and earn those money to move to earn. Simple. For the rest, I will advise people to keep a good eye on the market at the moment, as at the moment the market is pretty low. As you also showed the greed fact, the greed, of course, the fears at the moment very, very high. But that's the moment to buy, of course. When everybody thinks we're gonna get poor, we should buy. When everybody says we're gonna get rich, we should sell ASAP.
Right. Buy the fear and sell the greed. But we're seeing Bitcoin, struggling, at this point. Seems like 40K has become, a new resistance at this point, and it's looking like it wants to go lower. How are you seeing the market?
Yeah, I've also seen indeed Bitcoin is really struggling, sustaining the $40,000 level. But big support, big orders are set on 36, 37K. So to really go down below that is going to be very hard, as there are not many shorts to be liquidated at the moment. So we also can really make that trick happen. So I would say 36, 37K is a rough, safe place to be investing Bitcoin.
Right. So traders right now, obviously, we know how traders don't like to, buy when there's panic. They like to wait for the extreme greed point, you know, when the euphoria is high, you know, but, you know, it's a very volatile market. And, you know, we're seeing the same thing happen with, you know, global markets, especially the NASDAQ. We saw that sell-off, you know, it dropped about 4%. That was like last few days ago. What do you advise, you know, traders to do at this point? You know, it's not an easy market. It's really volatile, and, you know, we've seen, you know, some traders make a lot of losses at this point.
Yeah, 100%. I would advise people not to trade with emotions. Always just trade with your brain, with your knowledge, as emotions will only destroy your portfolio. It's a reason why 85% of the investors lose money instead of gains money, as they trade on emotions. And when the time feels like it's going to go down and you're, oh no, it's not good, that's most of the time to invest. And when you feel like, oh, I'm making great money, people are going to invest more. And then, yeah, the crash happens and they lose a lot of money. So I advise on just buy when people are feared, and when people get greedy, sell it.
All right, don't trade with emotions, and that goes for most other markets. Thank you so much, Bjorn. Always great talking to you.
Thank you, Ladi. Have a good day.
Right. All right, Ini, you heard that. Don't trade with emotions in any market.
Emotions, exactly.
Yeah, put your emotions aside.
Yeah, and some people will say consult the experts.
Yes,
and get expert advice before you make any move in the market. Right. Thank you so much, Ladi. Well, let's just dash to London now and have Juliana. Good morning, Juliana. A close one here now, but there are talks that 80% of inflation is being blamed on Brexit. I thought it was more about the pandemic and now the war.
Well, yes, if we're talking about experts, then we've certainly been hearing from an expert. Adam Pearson, he was a former Bank of England deputy governor who sat on the Monetary Policy Committee. He now works for a really institutionalized, influential research group in Washington, the Pearson Institute. And he's been speaking about inflation because we know, of course, it's a global topic in the economic sector at the moment. And he was looking at some of the reasons why the UK is having a kind of an outlier experience in comparison to other G7 nations. And he has cited Brexit for a number of issues that, of course, we don't have time to go into. But he's been looking at the labour market. And we know, according to official data from the Office for National Statistics, that we have a high amount, record highs of vacancies at the moment. It's very difficult for Britain to get in staff. This has a knock-on effect on supply chains, logistics, border controls, bureaucracy, when Europe is, you know, trying to get itself out of the pandemic, out of the issues currently ongoing because of the war in Russia. As a unit, Britain, of course, is scattering around the world trying to find these free trade deals. There are other aspects of Brexit controversy that he goes through, and hopefully we'll find time to discuss that in full detail, Inni.
Yeah, we certainly will, because we are going to talk to you again at 1:30. That's just a couple of hours away. So we'll certainly talk about that and much, much more.
Thank you.
That's it on the program for this morning. Thank you so much. We'll have the final one for the week tomorrow, and it's going to be very full and very interesting. I promise you that. But at 1:30, we'll give you more updates from today at 1:30 during Business Incorporated. Until tomorrow, I'm Ini John Mekwa.